This is Alan Bush with ADMIS with the financial futures forecast for Tuesday, May 5th. Over in the stock index futures, we are seeing prices lower this morning. Looks like we did see a rather severe drop in Chinese equity markets, which tended to put pressure in European equities as well as U.S. Stock index futures. In spite of this, though, we are still very close to new historical highs in the S&P and the Dow. We do believe that there's a very good chance that later this afternoon that we will see at least some partial recovery in stock index futures. Still thinking longer term that the main trend is higher as well. And I think this is a trend that will last probably through this year at least for the stock index futures. Now, moving over into the currency markets, we are seeing the Australian dollar initially coming under quite a bit of pressure in the overnight trade. This on news that the Reserve Bank of Australia lowered interest rates by 25 basis points down to a record low 2%. This was a very much widely anticipated move by the RBA. What was surprising, though, was that the central bank there eliminated their bias toward easing. So there was a very quick recovery, and now the Australian dollar, after being quite a bit lower, is now substantially higher. We continue to believe that the Australian dollar will be propelled to the upside by higher commodity prices, at least higher prices for the commodities that are exported by Australia. We also feel that the Canadian dollar will benefit as well by higher commodity prices. So these are our two favorite currencies, the Australian dollar and the Canadian dollar, to the upside. And I think this is a trend that will last for quite some time. Now, moving over to the dollar, there's a seasonal uptrend in the dollar index for the month of May. We are totally interested in fading this seasonal. I don't think the dollar will be higher this month. Our reasons are that overall we're seeing the U.S. economy coming in a bit on the slow side. At least recent economic reports have come in a bit weaker than expected. So that's up seasonal in the dollar index we think will not work this month. Also, we are seeing a little strength in the euro currency. This after the European Commission upgraded the outlook for GDP in the Eurozone for this year. Now, moving over into the interest rate markets, futures lower again. We did have one economic report that was a bit bearish for the credit markets. So in the last week or so, we are seeing the long end of the curve not responding well to the news. So we're going to stand aside in the 10 and 30-year issues, at least for a while, see what develops on the charts. And fundamentally, however, in the Fed funds market, we still believe that the Fed will not be raising interest rates anytime soon, even though the consensus view still is for a rate increase at the October meeting. We feel that there will probably not be a rate increase until 2016. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.